Stephen's got business on the programme as ever at this time now. We're going to start off with the value of the British pound. Still trading, Stephen, very close to those 31-year lows.
No recovery in sight for sterling today. It hit its lowest level since 1985 on Tuesday over fears of a so-called hard Brexit for the United Kingdom. This was the picture in the currency markets a short time ago. The pound trading at $1.27 and €1.13.5. It is worth looking back over sterling's trading history with the dollar just to see how important this fall is. So the last time sterling was at this level was in the 1980s. That was because of record strength of the dollar. The pound at that stage dropped to $1.04, and that was the lowest in the history of the two currencies. So we're still quite a bit off that level at 127 today. Now, analysts this time around, though, are saying that the fall in sterling could last for longer than it did in the 1980s. Rudaba Abbas has the story.
The fallout from the Brexit vote is rippling across the currency markets. The pound sterling hit a new 31-year low against the US dollar on Tuesday, just 2 days after Prime Minister Theresa May imposed a March deadline for triggering Article 50. Economists say confidence in the currency is low amid growing concerns that the UK will leave the single market and place priority on restricting immigration.
The political clouds really are gathering. There's a huge amount of uncertainty about how things will change for the UK over the next 2.5 years. And that, of course, is a big weight on investors and on investment. And that could be detrimental to job creation and to growth further down the line. So this is what sterling really is reacting to now.
But the Prime Minister insists the economy is in good shape.
Currencies, of course, go up and down. But if you stand back and look at the fundamentals of our economy, which are strong, most recent forecasts that are now coming out for growth in our economy this year, all of that is more positive than people had expected it to be and than people had predicted it to be.
Despite the uncertainty, a new report by the IMF has projected that the UK will be the fastest growing major economy this year. But it has forecast a sharp slowdown for 2017, with predicted growth at 1.1%. That's half the figure that was projected before the Brexit.
Well, Brexit, in fact, also featuring in the IMF's assessment of the global economy, which was published on Tuesday, wasn't it?
The International Monetary Fund says that protectionist political trends like the UK leaving the European Union risked turning back the clock on free trade and hurting the global economy. The fund left its forecast for global growth at a sluggish 3.1%, but it says the US will now grow at a slower rate than previously expected, just 1.6%. Now, the UK's position actually improved to 1.8% for this year, but it's fallen back for next year to 1.1%. The IMF's chief economist, Maurice Obstfeld, defended the warnings that the organisation gave before the Brexit vote about its potential consequences.
I think it was wise of us to warn against those possibilities. In fact, I think it would have been malpractice not to think about those possibilities. And clearly, central banks did think about those possibilities. They did prepare for them. Markets knew they were preparing for them. And I would credit that preparation in part for the mild response that we ended up seeing.
Well, let's take a look at what's happening on the stock markets next for you. Asian shares, a bit of a mixed picture today. We're seeing gains across most of the Asian markets, though. The Nikkei in Tokyo finishing the day up nearly 2/3%. Investors watching closely for a report from Bloomberg that the ECB could be preparing to wind down its bond buying program. Markets get worried about these sort of pieces of news. So it'll be something that investors will be watching as the day goes on. The Shanghai Composite still closed the Chinese markets on their week off this week.
Very nice too. Let's turn to technology now. This is about a new smartphone from Google, though.
It's the internet giant's latest attempt to rival the likes of Apple and Samsung in this market. The Pixel phone has all the standard features of a high-end smartphone, but it also features Google Assistant, which is the company's rival to the likes of Siri. Now, Google says it's working with the companies like Netflix and WhatsApp to implement voice commands in their apps. The search giant is trying to push into a market that's already approaching saturation. Let's take a listen to the view of the technology analyst Brian Blau.
Profit on smartphones is hard these days, but now Google has many different devices, so they can rely on other devices to get their profit. Beyond that, though, the smartphone is an important piece of the Google ecosystem. I felt today after the announcement that the Google ecosystem is much more cohesive than it was before.
That's Brian Blau there from Gartner. Well, let's take a look at some more of the day's business headlines for you next. The pharmaceutical company Johnson & Johnson has warned that one of its insulin pumps is vulnerable to being hacked. The product concerned is the one-touch ping pump sold only in the United States and Canada. The company says there have been no reported attacks and the risk is extremely low, but it's written to patients to inform them of the vulnerability. The ratings agency Fitch has warned Wells Fargo that its credit rating could be at risk because of the fake account scandal. It's lowered its outlook for the bank from stable to negative after it emerged staff at Wells Fargo had set up more than 2 million accounts for customers without their knowledge. Fitch says the damage done to the bank's reputation will be much greater than the $185 million fine handed down by regulators. And the British retailer Tesco has reported operating profits of £596 million, or around €677 million for the first half of the year. Like-for-like sales in the supermarket giant's home market of the UK rose by just 0.6%. The firm's also announced a new cost-cutting target of €1.7 billion.
Should we go right to the back, to the top of Stephen's bulletin once again? Why not? The drop in sterling we were talking about, of course. A bit of an unhappy consequence for Britain.
So the fall in the pound against the euro means that technically the UK is no longer the world's 5th largest economy, but in fact the 6th. Now, the International Monetary Fund estimates the size of the UK economy this year as £1,932 billion and France's at €2,228 billion. So that means that with the pound-euro exchange rate as is, the French economy is actually the bigger one. Now, it should be pointed out that economists don't consider this the best way to measure size of economies, but it may cause some waves, perhaps some glory stealing by the French side
Probably.
here. But also it's a little bit embarrassing for Theresa May because she's kept saying in all of her speeches to the Conservative Party conference that the UK is the world's 5th biggest economy, and that's why they will get a good deal for Britain. So someone may have to do some correcting on her later speeches.
They can just edit those bits out and somebody can shout 6th over the top. Why not? Why not? Stephen, thank you very much. Stephen with Business on France 24. More from